Welcome back to another Stock Market Open live stream. Today, I have to say I got a little carried away reading the Procter Gamble earnings press release. Procter Gamble released earnings this morning, and in their earnings press release, they talked a little bit about price increases and volume changes. Now, this is a company that had previously been very excited about price increases in the realm of 5 to 10%. Still showing price increases now, which I always like to look for to see what's going on. In Procter & Gamble's case, we saw a total price increase for the year-over-year period here. So we're still seeing some of that price comparison to the beginning of 2023 of 4%. Now, I'm personally really curious to see how their pricing moves on the month-over-month basis, and I don't think we're going to get that answer until we actually get through their earnings call, which their transcripted earnings call is not out just yet. But I find that very interesting that their pricing year-over-year is up 4%. Their volumes declined 1%. So they actually lost volume by 1%. And I think these consumer staple companies, they make like Gillette razors and stuff. I think these companies are going to see a lot of pressure as volumes decline to figure out how are we going to get volumes to increase again. Well, simple. You reduce prices. So it'll be interesting. We'll watch for that. This morning we've got, let's see, Philadelphia non-manufacturing activity coming out. This is not really much of a watched indicator, but we'll go ahead and read that out as it comes in. We don't even have an estimate for the indicator. We just have a prior release of 6.3, which was revised down to 2.1, and we get negative 3.7. There it is. Okay, negative 3.7 on the Philadelphia non-manufacturing activity. I want to see if there's a sheet on it. Let's see here. There is January 2024 Business Outlook Survey. Okay, so let's see here. Firms. Let's see. Price indicator readings suggest continued increases in prices for inputs and prices for firms' own goods and services. Prices paid moved up 2 points to 33.8. Over 36% of the respondents reported higher input prices. 46% reported no change. 3% import reported decreases. Ooh, interesting. So the Philadelphia survey, that's an interesting survey. Shows you're not seeing decreases just yet, still on that sort of disinflationary page where you're seeing probably price increases at lower percentages. Most of the firms, 51%, reported no change in prices for their own goods and services. And prices, what is this? Regarding prices for firms' own goods and services, prices received fell. Almost 21% reported increases, 16 decreases, 51 no change. Interesting. So firms reporting that the prices they're paying, it's more likely when firms are talking about what they're paying for them to report prices are higher or the same than it is for them to argue that they're able to raise prices. That is an interesting survey. So that's the Philadelphia non-manufacturing survey. Let's see here. Overall, firms reported increases in full employment, and the index increased from 8.3 in December to 13.9 in the month. Almost 20% of firms reported increases, 6% decreases, 73% reported steady. Makes sense. A lot of what we're seeing in either whether it's earnings calls or reports is that companies feel relatively well employed, that they have enough employees, and that they don't need to hire more. The question is, when does potentially that roll over to layoffs? Well, the only way that really rolls off to layoffs is if all of a sudden business growth turns into business pessimism, and then you get into a preservation mindset where layoffs start. That would be the problem. So that's an interesting survey. It shows you that at least in the Philadelphia district, you're not seeing this this plummeting of prices, and that will probably take some time, and frankly, probably joblessness to actually drive you to that. Okay, let's see here. Let's see here. What is this? Leading index. Okay, number of consecutive months. The leading index, month over month, has been negative for the Conference Board's leading indicator of 10 leading economic indicators. Oh, that's an interesting mouthful. So 10 leading economic indicators. This chart has been negative for 10 months. And the suggestion is that would make a recession more likely this year than not. How interesting. I want to show that chart. I think it's an interesting one. Let's pull it here. 1 second. Okay, yep, that would definitely take 1 second. But anyway, I'll pull that up in just a moment. Then while that syncs over, there is, let's see, soft data beginning to weaken but still positive. If it continues to do so, while the hard data remains weak, then a recession is more likely than not. Hard data is slowly recovering, though. And so if hard data manages to recover, while soft data does not significantly weaken more, then it's possible a recession is skirted. Ooh. All right. Interesting. Waiting for this to... All right, whatever. This does not want to sync today. I will get to the bottom of this to find out what is going on. Alright. Fine then. No problem. I'll just log into Dropbox manually. Let's listen in here for a moment, see what they have to say.
Hopefully, at least as far as she's concerned, blunt some of the momentum that former President Trump gained in Iowa last week. Join us now to talk about the candidates' economic agendas and their chances today. Hoover Institution fellow Lanhee Chen served as policy director on Mitt Romney's presidential campaign, and Brookings Institution economic policy director Ben Harris. I'll just start with you, Lanhee. I saw in some of your notes that there is a lag effect for the economy, and perhaps, in your view, Biden's numbers on his handling of the economy between now and the election, you think that there's a chance that those start to improve because they should be better?
Yeah, I mean, certainly how people reflect how they feel about the economy should be better. I mean, we're still seeing a lot of measures of economic anxiety. I think people don't feel great about the economy, even though the measures objectively demonstrate an economy that's in a pretty good place. It's possible that voters will revise their assessments as we move toward the summer and fall. But, you know, there's some other measures that I think if you're the Biden campaign, you're worried about. You're worried about the fact that you have more Americans than ever since the pandemic working multiple jobs, for example. There are measures that you look at and you say, you know, you kind of understand why people don't feel so great about this economy. So their hope has to be that there is some impact on how people actually feel, because you can't tell people how to feel about the economy. They feel how they feel about the economy.
That's not stopping them from trying, Ben. I hear it every day with the guests that we have on that say, you don't know how you feel. And I always say, Ben, and you correct me if I'm wrong, if real wage gains didn't start growing until May of last year, so, you know, at least 2 years into the presidency, and if your buying power is still below where it was when President Biden took office, can't you feel that when you go to the grocery store, that prices are up 30%, my wages are not?
Yeah, so I'm glad you brought up inflation. I mean, inflation over 2023 outside of housing is below 2%. And Lonnie is right. I think that you start to see consumer confidence go up with a lag, and you saw a big boost over the past 2 months in terms of consumer confidence. It does feel like perceptions are changing around an economy. The labor market is still red hot and looks like it's in great shape. So while I agree that there are certain aspects of the economy that people should be concerned about, overall, between the labor market and calming inflation and continued economic growth, this is really a good news story, and you're starting to see that in the consumer sentiment.
Lonnie, you know, when it goes up in 2023, disinflation, it drops to plus 3%. It doesn't erase the 2022 and 2021 increases. And I think that's part of the problem. If you look at total inflation in a lot.
Yeah, all right, we already know that. Of course, you're not going to reduce the previous price hikes. But, okay, I got the picture. So here it is. Look at this. The leading index is very recessionary. So, as you can see, when this spikes, you're pretty much always in a recession. I agree. That's the challenge. Is so there obviously are two things that this could mean. You go into a recession, it could be horrible for stocks, or you get rate cuts, and then the stock market continues its euphoria through a recession, and what happens? Who ends up holding the bag? Who suffers the recession? You go into a recession, rate cuts lead the stock market to do well while you're in a recession. Who suffers? Well, the people without assets. It's that simple. Bottom 50%. No real estate, no stocks, no bonds, high debt, multiple jobs. It sucks. Single moms, single dads, whatever. Not good. All right. In other news, Baba. People are excited about Baba because Jack Ma's doubling down. Dublin. Like the city. Apparently Jack Ma bought $50 million worth of Alibaba stock in Q4. A lot of people see this as him attempting to signal that now's the time to buy Alibaba stock. And I will say, that stock is probably selling for, even with lower Chinese growth estimates, it's probably a one peg. Excuse me. So if you're at a one peg, and the cheapest price this sucker's basically ever been, who knows? Maybe there's an opportunity to make some money on Baba, or you could have just owned DWAC yesterday. But hindsight, I suppose. Anyway, here's Baba up 6% in pre-market after that news of Jack Ma, and then let's go look at DWAC, the SPAC. DWAC the SPAC almost doubled yesterday. This is, it's really become a vehicle for speculating on Trump's candidacy, and it's kind of entertaining because, like, I guess I would have looked at this and been like, all right, like, did anything really change between these last few days about Donald Trump? Well, DeSantis dropped out, but was he really a threat to Trump? No. Was it enough to speculate on DWAC? Absolutely. So sometimes it's very interesting. If you try to take a fundamental point of view to explain trading moves, you will always lose your mind. You cannot use fundamentals to explain trading, and that's okay. That is okay. On like a technical analysis basis or a momentum basis, those words don't make a lot of sense for people who are fundamentally solely fundamental based. I think you can have a mix of both, though, right? You can understand the fundamentals of something and then still trade it. You just have to know what you're using at any given time. You're like, for example, you might have momentum moves in Plug Power right now, which is totally fair. I mean, you're coming off a bottom over here, and it's had multiple days in a row now of positive activity. Does that make it a fundamentally good stock? No. Is it potentially something that can make you trading gains? Yes. Anyway, here's Coinbase. Up 2.7% yesterday, down 4% now. Tesla's got earnings tomorrow. That'll obviously be very entertaining. The problem with Tesla right now is it is not in a great technical place. It's in a very bad technical place. It's basically asking to go to 175. So, if I'm looking at the downside for Tesla tomorrow, it's 175. Now, do we actually believe that it's going to 175? I have no idea. But what's Elon going to do? I think a lot of damage control. That's basically, look, there's no just like super clean and easy way to say it, but he is of the mindset that people believe that he is potentially, to some extent, anti-Semitic, and so now he's been doing basically a tour of whether it's Israel or collabing with Ben Shapiro at Auschwitz, the concentration camp, whatever, or at events in Europe focused on anti-Semitism. There is a damage control sort of a tour that's being done, if you will. And I think that same sort of damage control probably needs to appear in the Tesla earnings call, especially in regards to Elon's sussiness about 25%, otherwise we're not doing AI, in regards to his stock comp, which feels a little bit like another Elon rugging, but whatever. So anyway, Coinbase, yep, we saw that. That's leading the downs today, along with Bitcoin ETFs and some miners, not to be confused with children, miners like Bitcoin miners, as Bitcoin's now sitting at 39,000. Yeah, that's almost 10,000 lower than where we were at the peak following the ETF approvals here. Yeah, right. Okay. So, what else? Okay. All right, interesting. Mexican peso slides as New Hampshire votes in primary. The Mexican peso is the worst performing major currency this week in the absence of any local news. Instead, it seems that the peso is trading on U.S. politics. Ron DeSantis' campaign flopped, and Nikki Haley, Trump's latest challenger, faces a make-or-break primary in New Hampshire. The peso, which is liquid and trades 24 hours a day, is an easy vehicle for investors to bet on the U.S. election. Well, so is DWAC. It just doesn't trade 24/7. Okay. Interesting. What else? All right. Let's listen in here.
SEC Jay Clayton in just a moment. Oil giant ExxonMobil going to court in an attempt to stop a shareholder vote later this year on a proposal that would see the company adopt tighter climate targets known as Scope 3. Exxon is the only Western oil major that doesn't set Scope 3 goals. For its part, the company is saying the activist investors' repeated proposals don't serve shareholder interests. Meantime, Bernie Sanders now taking that CEO comp pay ratio and proposing a way to tax big companies that have a big gap between those two. Joining us right now to talk about all of it and more, former SEC Chair Jay Clayton. He is now Apollo Global Management's non-executive chair and a CNBC contributor. And I want to go actually to the Bernie Sanders of it all before we talk about the Exxon piece, because it is something that was just...
boring. Sorry. Yeah, it's just not entertaining. What's more entertaining is a 16% jump in December e-commerce volumes. The highest jump in volumes in almost 2 years, which makes you wonder, is that the last push? The last push of Q4? Are people now out of money? But anyway, which helped drive a 5% gain in U.S. consumer spending, suggests an easing of inflationary headwinds may bode well for payment firms. PayPal, Visa, MasterCard are poised to benefit as people spend more on travel, leisure, and services online versus retail goods. Okay. So this is basically saying people are spending more on the internet than they are at brick and mortar, essentially. Yes, that's actually quite specifically exactly what they're saying. Okay, stand by for the screenshot and I will show you. I realized what I was doing. I was looking in the wrong folder like a little dummy. But that's okay. Everybody makes mistakes sometimes. Here you go. So this chart's a little funky to understand. So look for the white. And right here, all industries, brick and mortar, which is the white line. You can see the white line has gone down. And the e-commerce line, which is the pink or purple line. I don't know, it's a mix of both. It's somewhere in between pink and purple. Anyway, that line is going up. Now, I want to see how volatile this is. Let's try to draw some trend lines here, because just looking at the little end here, who cares? I mean, they did draw a baseline. Yeah, this is since 2021. I mean, in fairness, yeah, you're higher than where you were. I mean, you did have a low over here, so it's a very volatile read, this total retail for e-commerce line. but it's certainly higher than where it was. That's very interesting. And then brick and mortar. Oh, wow. Yeah, look at the trend in brick and mortar. I mean, the trend in brick and mortar is obvious. Yeah, let's make that a little larger. There you go. That's the trend in brick and mortar. Straight down. The e-com's a little bit more bouncy-downsy, but that's very interesting. Okay. Visa and MasterCard stand to benefit from leisure and travel demand as Asian economies reopen and airlines add capacity, even as Visa's cross-border travel volumes may be slow to gain. Okay. Credit card growth and spending recovering from two-year loan. Restaurants holiday recovery helps Toast and Block Square. It's so hard for me to think of them as Block. Then again, I have the same problem with Square or X and Twitter. Transactions top ticket growth. Wow. That is an also interesting chart, because we generally think, okay, well, people are running out of money and they'll spend less. Correct. They are spending less money. However, they're spending less money more often. What a bizarre concept. Yes, let's spend more money less often. Sorry, no, the other way around. Let's spend less money more often. Yeah, that's the way. See, this is transaction growth, and this is ticket growth. So ticket growth is negative. This is a percentage. You're negative on tickets. You're positive on transactions. So again, let's write it down since I've butchered it. Okay, spending less money more often, and then you go. Brought to you by Jerome Powell. Okay, very interesting. Let's go back to you.
You're looking at this as a spot market. It's not a spot market. There are phases of being a CEO. When you come into the job of one of these large multinational companies, no matter how many jobs you've had, it takes a year or two to get your sea legs. And then you're performing in direct...
Okay, I don't know why we're talking about getting sea legs as a CEO, but whatever. So boring. Okay, what else? Recession, let's see, what is this? Soft hard data out of sync. Yep, we've seen that. I agree. Stocks remain vulnerable to a late recession. Okay, so let's see what we have here. This is a fancy little chart. Let's analyze this one together. Stocks remain vulnerable to a late recession. Bear market with recession. Bear market no recession. Today. Days before and after peak prior to bear market. 20% drawdown. Okay, we'll have to look at that. Stand by. Okay. Here we go. So, let's try to understand this one together here. Give me a line here. There we go. All right. So what do we got? These are days before and after peak. Okay. This is the prior peak. And then you have this decline in all cases. Bear market, no recession, which is the white line, also saw a decline. And then you have this bear market with recession. And what's the red circle? Say, I don't know what the red circle is. What's the red circle? It looks like they're just highlighting the last data point. Or are they highlighting, let's see, the point of recession? Well, I mean, today we're technically not in a recession yet, as far as we're aware. I don't know what they're highlighting with this red circle. It's very annoying. What does it say? There's no description for this sucker. Okay, fine. So, I don't really know what to make of this. I mean, really, excuse me, really what they're trying to do is they're taking bear markets back to 1929 with a recession, and they're taking the average price movement. So they're taking the average price movement and suggesting that, at like 600 days post, you might be down, what is that, 15%? That's very interesting. Okay. So you might be down, say, 15%. Is that what they're trying to say? Okay, let's pull this over. Yeah. Okay. Whereas now, and a bear market with no recession, we're positive. Again, I think they're just circling what their label of the line is, but usually you don't label the line with this red circle like this. So a little bit of a bizarre chart work here, but that's okay. So essentially suggesting maybe if we're in a recession, to be in line with history, the stock market should be lower. That's essentially the argument here, which is interesting because, that would set you up for like a 20% drawdown again, right? On an index, which then if you have a 2 beta stock, that'd be like a 40% decline. So some potential issue is essentially what they're trying to suggest here. Okay, that's fair. Now keep in mind, this is obviously not a guarantee. This would be a median movement. So I'm sure if you break out these bear markets going back to 1929, you break out this actual data, you'll have some that are substantially higher and some that are substantially lower. Of course. Okay, very well. Let's see here. Let's take a look at what other earnings we've got today. So we have... Oh, and what's going on over here? Hold on. Oh. Okay. The first... there was a midnight vote at a particular part of New Hampshire, Dixville Notch. It's a town near the Canadian border. And they claim to be the first in the nation, of New Hampshire. Okay, that's interesting. First in the nation of New Hampshire primaries. All right, by gathering all the voters together at 12:01 New York time to make their pick. There were more journalists at the event than there were voters. And Nikki Haley won all 6 votes. 6 votes. That's funny. That's really interesting. Okay. All right. Well, whatever. So, anyway. Okay. Let's look at what's going on with GE. Okay. Individual news. All right, so let's see here. GE, we have $1.03 adjusted EPS. The expectation was 91 cents. Q1 forecast of 62.5. Expectation was 70. That's a miss on guide. We have adjusted revenue of 18.5 for Q4, which is a beat. High single-digit revenue growth for Q1 expected. Wow. GE drops 10% after adjusted EPS outlook. Oh, bro. If GE can move that fast, imagine what some of the more volatile stocks can move. Let's find out. Let's see here. GE. General Electric. It's not 10%. It's down. Dude, it's down 1.7%. At least my chart. I don't know. Maybe my chart's out of date. 1.7%. See, that sounds more like GE. Let me try a different platform. No. Yeah, I'm not seeing 10%. So that's not accurate. There's AI failing for you. This is probably a Bloomberg AI, but I don't think it moved that much at all. I only see it down. Oh, well, I don't think is that 10%? Oh, that could be 10%. Yeah, it was down 10%. Never mind. Yeah, look at that. It dropped all the way down to 118, and now it's at 129. So it was 118 divided by 131. Yep, that's 10%. That is correct. Very interesting. Wow. That's pretty volatile. All right.
What comes down the road for the economy because you feel like, okay, take the Fed out of the equation here?
Absolutely. And I think that's where it's going to be kind of sectors and stocks that you have to pick on. So think of, healthcare, energy, utilities that have all kind of come down because now the market's saying, hey, maybe rates don't come down. But if they have strong earnings or they just keep up with earnings expectations, you could see multiples expand in those areas where you've actually seen multiple compression. I mean, you've seen expansion in tech and communication services, but I think that's where the next leg of the market could be up. Doesn't necessarily mean the S&P will go up, but it means the equal-weighted S&P could go up, or the selective other indexes could go up.
Yes. Okay. This is an interesting perspective. It's basically arguing that, hey, an index could stay flat as maybe some of the stocks that have run slow down, and then other stocks catch up. Okay, interesting argument. I don't disagree.
Not to say I don't own the Mag 7. I think you still have to be in there. It's just a question of how much do you want to own of those, especially with the expectations built in. They have to really have really good earnings and actually increase their expectations.
Okay. So, thank you. Always great to see you.
Thank you. Thanks.
Let's take a very quick final check on the markets this morning. You'll see right now that the futures, about a half an hour to go from the opening bell, futures are looking for slightly lower open when it comes to the Dow, off by about 30 points. S&P futures are up by 7.5. The NASDAQ up by about 50. It's a little bit of movement from where we started. We did get a flood of earnings that came in, and you've got the 10-year now yielding well above 4.1%. The 2-year sitting right at 4.4%. We'd watched Bitcoin earlier. It was back at around 38,000 and change. Not sure where it is right now, but WTI is coming off its highest level that we've seen since December 26th. That does it for us today. We will be right back here tomorrow. Right now,
now they go to Jim Cramer. Anyway, okay, good. So now what? Okay, well, let's find out. Is anything really moving here in the price? We know we saw Coinbase, we saw Baba after Jack Ma. We have, let's see here. Okay. Let's flip this around. Plug Power, 19% now, still moving. Alibaba still sitting at about 6.5%. But look at Plug. You've got some, wow. We were watching it, I guess, on the rise earlier, and it looks like it took a tiny little bit of a seat back, just to come back here. Okay, look at that, 21%. SoFi up again, 4%. Okay, so that's interesting. Yeah, I think that's just over a fib. Yeah, we didn't get a full candlestick above. That's okay, but I want to say that's 792. So, yeah, it's 790. Yeah, 792. That seems about right. So, if you're at 792 here on a fib, you closed on the fib. Right now, it looks like on the day you're gonna break above the fib. That 825 should go to 879 pretty quickly from a technical basis. So, there could be a move here on SoFi again, which we talked about yesterday as well. So, I'm watching SoFi. Bitcoin, 38.7. What else here? GE, fine. Home Depot, fine. Etsy's flat. Nvidia could not close above 600 yesterday. Dodge that 600. We know when they broke 490 to 5, that was a big breakout catalyst, which we got. ARM's still sitting in the 70s. Pretty impressive for a company that I think is so diluted. Plug's now at 24, just moved up another 5%. Alibaba is not really moving that much, mid 6.5s. Enphase looks like it's trying to turn around again. Yeah, boy, it had another little seat back there. Trying to get a turnaround there, which is probably good that it doesn't end up closing too often below 113, though we're not really back to that yet. If we could just sit on 113, maybe we'll get another breakout potential there or shot between 113 and 119. Open door. 10% yesterday, 4% today in pre-market. Look at the volatility. It's wild. Well, okay. Let's see. Okay. Let's close this all out. What do we have? Yes. Okay. So, remember, we have our Fed Day coming up on the 31st. That's going to be quite interesting. Let's take a look at Fed pricing for rates. My guess is they've continued to decline. I don't think we're going to get I think the Fed's going to talk down a March rate cut. So it could lead to some pullback, but we'll see. It depends how much we unprice the March rate cut now. Like, I think it should be low. I hope it's low. The lower the March rate cut odds are, the better, because it means you've already priced in that you're not going to get it, right? Like, if you're bullish on the market, you don't want this to say big rate cut chance of in March, because if that doesn't happen, you have pain. Okay? We are at 41.8%. 41.8% chance of a March rate cut. That is about half where we were about a week and a half ago. So 41.8%. Very interesting. Very interesting. Now, the other thing that is very interesting, I was talking with a buddy about this, good buddy, at dinner yesterday. Fed. Let's see here. There we go. Okay. So, this, I think, is one of the most fascinating charts that exists. So, he said, hey, I want to get into some more stocks. I want to buy some real estate, but I don't want to buy real estate until rates are like 2.5% or 3% again. And I want to wait for rates to come down to start buying more stocks. And then I showed him this chart and I said, you and everybody else, buddy. And he's like, oh, damn. This is the chart of money market growth. And if you compare to 2018, we are $3 trillion higher today. $3 trillion higher in money market exposure than where we were right before the pandemic, in roughly the year-ish before the pandemic. Wild. So, and a lot of this increase actually in 2023, you had I guess I shouldn't say a lot of it, but you had a $1 trillion increase in the money market funding in just 2023. That's crazy. So, $1 trillion increase over here. This, in my opinion, is money that ends up moving into stocks and real estate in the future. Crazy. Clayton Morrison here says, I sold Costco at $6.96, 50 PEs too high. Costco is selling for over a 4-peg. The valuation is absolutely insane. Absolutely insane for Costco. But yeah. Anyway, yesterday we did talk about a potential technical move for Bitcoin. Maybe it wasn't yesterday. One of the prior days. What we did, as I said, if we don't hold 42, we're probably going to 35. Just basic TEA. That's it. Just on a technical basis, you're probably going to 35.9. So it's very interesting. All right. Next. So, let's see what Jimbo has to say.
What? A long time ago.
He was also president.
Warned about that.
He was president of Columbia University.
He warned about the
that goodbye speech was good, very short. He was president of Columbia University, and we didn't know if he was Republican or Democrat. Not unlike Dean Phillips, who's running tomorrow. If he gets 4%, then today, if he gets 4%,
have you listened to Dean Phillips rallies in New Hampshire at all? Have you? I've actually been listening to them.
He's
very articulate.
He is articulate.
Very.
I find Kurt Anderson in Atlantic was a very articulate about Bill Ackman.
Well, that may have been the case as well. But Dean Phillips, yeah, he's probably not going to beat Biden.
If he gets 1%, it's a big win. You don't understand the way it works.
Biden's not even on the ballot in New Hampshire. They got to have him written in, but Dean Phillips is. But of course, the DNC is keeping him from the ballot in a lot of other states.
I campaigned for Gary Hart in 1984. And the word was, listen, we don't care what number we get. It's a huge win. That was like, at 7 o'clock. It's a huge win, Jim. Well, no. I mean, don't we care about how... No! The results don't matter, you idiot. That's just when I first learned that you never let the facts get in the way of a good story.
I hear you.
Thank you.
Well, we'll keep a close eye on Dean Phillips. Meanwhile, was RTX a win or not? They beat 2020. Their guidance for 2024 free cash flow does seem to be ahead. We'll have an opportunity, as Carl said, to speak to Greg Hayes in the 10 o'clock.
Okay, come on. You want to know the missing thing that you haven't mentioned of why that stock is really up?
Why?
Because the GTF, the engine.
Yeah, what
looks
about
like the problems are much less than expected.
Not for Spirit Airlines, they're not.
Spirit's still in the sky?
Yeah, they're still in the sky. Actually, that stock has come back a good amount.
Oh, yeah, because people believe that they're going to win the lawsuit. How can people go hire a lawyer?
No change to the GTF replacement plan.
Well, if anybody needed any bullishness on Spirit, there you go. So Johnson & Johnson, by the way, they beat by a penny on their adjusted EPS. Their Q4 sales actually came in stronger, and they reaffirmed their guide, which is interesting. No recession yet, I guess, on Johnson & Johnson. But I'll tell you, there's one company that's almost certainly in recession, and that's, of course, Lockheed Martin. Who needs bombs? Lockheed Martin, operating profit beats $2.29 billion versus the estimate of $2.24. Net sales come in almost $1 billion higher than expected. That's odd. Who would be buying more rockets and bombs? Net sales coming in at $18.87 billion versus 17.9 expected. I wonder what their forecast is. Well, their backlog is up to $160 billion, up 7%. And their forecast is a smidgen higher than expected. That's interesting. The estimate was 68.66. The midpoint is 69.25. Lockheed is now planning on repurchasing shares of about $4 billion. Now, their EPS forecasted miss a little bit. Probably down about 70 cents on that from the estimate of 26.74. Interesting. All right. What a shocker. What's another one? Let's see. 3M and DR Horton reported this morning. Okay. DRH. Let's try that. Okay. DR Horton. What's their ticker? Oh, it's DRI. What? Okay. Yes, DR Horton's ticker symbol. Of course it's DRI. Okay, incentives will remain elevated in the near term. Increased incentives and reduced prices in the quarter. Hey, real estate problems. DR Horton drops 8.4%. Really? Ooh, I want to read that earnings call. No, it's only down 4% now. Yeah, but look at, like, what it's done. I mean, it's at mega all-time highs. That's crazy. Crazy. Yeah, sorry, DHI, not DRI. But anyway, yeah, it's DHI. But anyway, that's wild. That is some crazy stock performance. This is the week chart right here. And you could see since COVID, I mean, it's up, I don't even know how many times that is. 6 times? 6x since COVID. It's up roughly 3x since pre-COVID. Wow. That is wild. That is very shocking. Anyway, good for them. And D.R. Horton is now interested in buying smaller builders. Also interesting. Okay, how about 3M? That one, guess the ticker. MMM. See, that one actually makes sense. All right. So 3M, weaker forecast on adjusted EPS. Q4 EPS beats. Sales growth flat to 2%. Well, that's not exciting. And yeah, adjusted EPS missing. They're suggesting that consumers are staying wary. That is such a bizarre word. Ooh, there are going to be so many juicy earnings calls to read. I want to see what's going on at all of these. I can't wait. So those are the things I get excited for. Consumer goods spending, earnings calls. Yeah. I know you're jealous. All right, BTC. Trying to turn around here? Trying to. Let's see what happens. Who else reported this morning? Verizon, that's boring. I mean, I guess Verizon could show you potentially some damage from the consumer. So if I go Verizon and like defaults, churn, cancellations, what do we got? Nope, they actually beat. Looking at 2 to 3.5% growth with a beat on EPS forecasts. Okay, adds the most mobile customers in 2 years on turnaround. Wow. Expect net positive adds to mobile growth. Very interesting. So, ooh, somebody says Riot just cut 11% of their workforce. Let's see. The layoffs begin. Is that true? I don't see that. Let's see. Oh, yeah, there it is. You're right. League of Legends developer Riot Games announces layoffs of 530 staff. 11%. Wow. Lengthy statement issued. It was a move to create focus towards a more sustainable future. It's beginning. It's gonna get worse. But you just have to hope that it's not gonna be me. Yeah. 2024. It's going to be interesting. Okay. Goldman Sachs trader says sell everything. Might be right. Who knows? Could also be wrong. All right. Let's go back over here. Oh, I can't. They're on commercial. Fine. Fine then. What's next? Oh, did United Airlines report? Okay, we'll go look at that one. Yeah, we've gone through. We started with Procter and Gamble. Now we know who showed up late. All right. We have United Airlines. Oh, this reported yesterday. That's boring. Frustration with Boeing. Adjusted EPS comes in better. $2 versus $1.69. Forecast. Oh, but that forecast loss per share is bad. 35 to 85 cent expected, as the forecast versus 21 cents. It's not a good forecast. They do a lot of Boeing complaining. A lot of Boeing complaining. And passengers flew a little bit less than expected. Fractionally. There's a tiny little rounding error there. 60.67 billion miles versus 61.04 billion. Wow. Now think about that. Oh yeah, we fly billions of miles. Oh my god.
But what caught my
Oh, we covered this one already.
fixed wireless as a competitor to broadband to the home.
Ooh.
Take a look at that number in the quarter.
That was
375,000 net
impressive.
ads in one quarter for
That was
Verizon.
impressive.
And remember, we've been focused in the past on T-Mobile, which has been active in this area in terms of providing fixed wireless access to it to subscribers to replace their at-home broadband. They've got over 3 million now. They want to get up to as much as, 5 million, and they're ahead of schedule in terms of doing that at Verizon. And then you can see the postpaid phone net ads of 449,000, which was also strong. Keep an eye on our parent company stock, Charter, because there is definitely competition going on here. Now, we've made the point in the past, as has Mike Sievert at T-Mobile, that ultimately they're capacity constrained, it would seem, in terms of providing fixed wireless broadly, because you want to actually use your towers and your capacity to provide wireless service to customers.
Yeah, all right, that's boring. Interesting. The end of the Federal Reserve's balance sheet runoff and potential repeat of the 2019 funding problems might seem like a tomorrow problem, but we are at the stage where reserves could go from abundant to scarce very abruptly. Funding issues pose a risk for assets. Everything in the news poses a risk for assets. Therefore, knowing in advance when they might be able to take a turn for the worse is of great utility. Building on insights gleaned from the funding markets and how they typically behave ahead of turbulence, we can create a funding stress trigger that has activated ahead of prior flare-ups. Okay? Let's see their trigger. Watch for this signal. SOFR spike. Okay, I remember that because I was doing an interview with Jordan Belfort when that happened. Stocks are becoming more sensitive to a decline in reserves. Yeah, but they're going up as reserves are declining. That's bizarre. Okay, so we'll look at that. And then mousetrap for identifying funding stress. Funding stress trigger. Boy, it just happens moments before the funding. Well, that's not very leading useful. Okay. I'll show this in a moment. Funding stress is basically when the overnight rate market skyrockets. A lot of people have loans that are tied to SOFR, standard overnight funding rate. And so basically things break or start to break when nobody's interested in lending overnight. So the concern is that you end up breaking something again. Although I will say, both the Fed did bail out the bond market here, and promised to stop their rate tightening regime and, quite frankly, their quantitative tightening, which led the market to rally again throughout all of 2019, essentially. And then you still had funding issues here, but I don't remember this being such a big deal. The September 13th, 2019 one certainly hit the news, but it wasn't, as far as I'm aware, associated with a massive decline in markets. But maybe I'm wrong. Let's go look. We have the charts. Let's just go look. So I have a thesis that it didn't really matter much. We will find out how much it mattered. It wasn't that long ago. So we just have to scroll here. We have to. Oh, there it is. Wait, is that it? No. September. Yeah, dude, the market did nothing. Absolutely nothing. Okay. September 13th, 2019, right there. The market was down 36 basis points. The day before that, it was up 42. The day after that, it was down 44. The day after that, it was up 48. Like, literally nothing. It's almost like the definition of flat. Okay. There you go. So what's the point then? I don't understand. When do they care? Can we identify the stress is imminent? No. The straw that broke the camel's back, corporate tax payments that day. Q is sudden nonlinear deterioration in the funding market. That's even more the case as asset prices sensitive to the Fed's balance sheet today is higher than it was in 2019. Fine. Sensitivity is rising, indicating stocks are becoming more vulnerable to falling reserves. I don't know about that. And it's all a big unknown. Yeah. Okay. Well, that's a waste of time. Okay. Fine. What else? Let's take a look at commodities. Let's see commodities and bonds. Let's see how we're doing this morning. So we've got oil at 79. You just can't get above 80. You just can't get it over that. You've got the 10-year at 4.13. Inversion is 27 basis points. Gold 2025. And CNBC is running a headline, "Markets complacent about the risks of a Trump win." Okay. Everyone's talking about Trump and Haley. All right. What's next? Let's look at our forward-looking economic data as well as our earnings. So earnings. Later today, we will see earnings from Netflix today. Oh, that's always a good one that leads the market sentiment going into earnings season. Very interesting. Very interesting. Let's see here. Can you do a notification about live streams in eHack? Maybe. Kevin, my girl just said she got laid off. What does your girl do? My girl. So, I mean, I'm sorry to hear that happen, but the phrase is funny. My girl. So, okay, what happened? What was she doing? Sorry that happened. And what line of work? So let's see that. What else? Let's see here. I'm trying to see what anybody else is saying. Okay, we got a few minutes to go here. This girl was a crypto bro on leverage. Oh. All right, well, we'll wait for you to reply. But in the meantime, Netflix coming out today. Let's go to, what do I prefer, Cane's or In-N-Out? I honestly don't know that I've ever had Cane's. I know that might sound blasphemous. Okay. Here's Netflix. So, how interesting. We drew this trend line whenever we drew it. We are certainly below that trend line now. The stock should be at like $600 if that trend were to have continued. So we've created some form of wedge pattern, it appears, from there at least. Let's see if we can get any kind of... No. I can't really get anything good here. Wait. No, come on, stop rubber banding. It's magneting. Let's see what I get over here. Nah, that's not particularly useful. Okay, interesting. So anyway, Netflix at one point was as high as $701. And right now it's trading about $494 pre-market. Well, this will be really entertaining today then. Be very entertaining. Netflix blocked shared accounts this quarter, so should be big earnings. Yeah, the password change, honestly, probably is going to lead to a lot of people just making a second account. People like Netflix. Netflix and chill. Tomorrow we'll have PMIs, manufacturing PMI, services composite, relatively boring catalyst. Thursday we'll have GDP annualized, with the GDP price index expected to come in at 2.2%. For Q4-based inflation, 2.2%. That's basically at the Fed's target. Then we'll also get inventories and new home sales tomorrow. And then on Thursday, we'll get PCE. Very interesting. All right. Let's go get the bell.
Okay.
Okay.
He will be joining us in the 10 o'clock hour.
You have him?
Yes, we do. Yes, we do.
And I get Greg Hayes. You got Mike Roman.
Yeah, we got Mike Roman.
Why am I
There he
not on
is.
the 10 o'clock?
You are in the 10 o'clock.
Oh, okay.
Remember? You're
I'll
taking
stick
over
around.
the hour, the
Yeah,
Eisenhower.
stick around.
You're taking over the Eisenhower.
I've got 3 things I want to talk about right now.
3 things.
Yeah.
Okay.
No, that's from the Eisenhower.
Oh, you mean the top of the show?
General Eisenhower.
We'll still have the
Yeah.
top of the
Yeah,
show.
okay.
With Sarah's 3
Yeah.
things or 4.
You're Omar Bradley. You never matter.
Jim, whether it's P&G Revenue Light, the 3M guide,
Oh, no,
the
P&G.
GE guide, are industrials cooling off or not?
Well, no, there's an inflation problem with GE.
TKO, by the way, is up like 22% here in pre-market. Wrestling.
Consumer problem. I am detailing a lot of problems, and I'm not denying that. Procter's the one that was set up to do Bailey, and it did a little better than expected. Don't forget Starbucks. My travel trust knows it. That's supposed to be just awful.
Let's get the opening bell. And the CNBC real-time exchange at the big board. It is TKO, Ari Emanuel, members of the board. We'll talk to him and new board member Dwayne "The Rock" Johnson in a few moments. At the NASDAQ, it is venture capital firm GGV Capital.
Yeah, that's pretty cool. So The Rock joined the TKO board, and now they're ringing the bell. That's pretty cool. Good for them. Very, very cool. All right, so what do we got? Okay, Baba. We got our little 6% there on Baba. Then we've got the Qs, basically flat. Netflix going into its earnings, trying to open down. DR Horton rotating down. I'm not going to look at that one. And DWAC dropping about 5%. Costco, 23 bips. Super Micros down a couple percent. Although this one's been doing pretty well. Yeah, you've had quite a run over on Super Micro. Palantir, 1760. It's above a support now. Opens coming down. Enphase, ooh, trying to get a breakout on Enphase, up 6%. It's after a strong day yesterday. Very, very interest rate sensitive stock. This should be very obvious at this point. If you're wondering, why is Enphase down? You should not be holding the stock. Let's see here. Coin trying to recover after being down 4%. Nvidia is shaving off, down about 1%. AMD shaving off a couple percent as well. Intel's dropping 1%. Taiwan Semi holding on to its gains. Spirit Airlines recovering, still up another 7% here, but after this massive destruction of a drop here. Went all the way down to $4 from 16. My goodness. Some recovery here. And Trade Desk just over 70. Neo. Look at the Neo recovery. I don't know if this is Baba sympathy or what's going on over here. But Rivian's also up. So there's some kind of autos movement here. Because you've got Rivian, Neo, and the stock that shall not be named, which are all up. Wow. Interesting. Okay, fascinating start to the day. Meta is also up a bit. And then let's go to good old Goog just to see it here. Ah. Alright. So, now, let's find out what else is going on. China? China buying stocks? Let's find out. The most of the market has been a little upset about China not providing enough stimulus. Waze stock market rescue package. Wow. That's very interesting. Chinese authorities are considering a package of measures to stabilize the slumping stock market with forceful steps. Policymakers are seeking to mobilize $278 billion, mainly from the offshore accounts of Chinese state-owned enterprises, as part of a stabilization fund to buy shares onshore through the Hong Kong exchange link. Wow. These are just being deliberated right now. The formation of a state-backed stabilization fund has been contemplated since at least October, so some investors have raised doubts over the efficacy of Beijing's previous rescue efforts, which have not always worked. A potential support package should be able to stem declines in the short term and stabilize markets into the Lunar New Year. But the state buying alone has historically had limited success. Well, what you're trying to do is like ignite other people to buy the dip, if they actually end up going through with that. Interesting. Okay, but that's not really much in terms of EV news. Like, does that really help us with Rivian, for example? Not really. But let's see. Rivian news. No. Nothing. There is no news. Da is kein News. Oh, look at that. Nasdaq Doodles goes red. What's driving the Nasdaq Doodles red? Well, it's not Bitcoin, which is still dropping, now at 38.5. Costco, let's go. Finally, it's down 61 basis points. Let's go. I'm still down 4.9%, I believe, on my short. That's okay. It'll go down eventually. It's a 4-peg. Enphase, 6%. And Nvidia, ooh, nice drop of doodles there on the chips. I think the chips are taking a little bit of a breather. Because Apple's positive. Apple's going to try to run for 200 again. Very interesting. Okay, good. Let's see what else here. Let's see. Stocks stuck in a range as earnings take spotlight? Well, yeah. China's bold stock market rescue plan leaves investors skeptical. Yeah. United CEO blames Boeing. We already saw that. Covered a lot of news. I want to see what else there is. Let's see what the suits are complaining about. They're always complaining about something. Bond investors going neutral are now poised to pounce later. What? I don't even know what that title means. The U.S. bond market is in wait-and-see mode. 10-year yields are unlikely to stray too far from current levels. Okay. PCE data coming out. Positioning remains range-bound. JP Morgan survey shows neutral positions. Flows were limited so far today. Boring. Oh, Nvidia's rebounding. Anna believes that Coinbase is dropping because of a JP Morgan downgrade. I highly doubt it has much to do with JP Morgan. Coinbase has been trading as much more of a Bitcoin proxy, like a stock you could bet on based on Bitcoin movements, than Coinbase fundamentals themselves. My take. Ooh, look at Google. Look at Google go. Go, Google. You're up 43 bips here on the day. How are we doing over time? Wow. Wow, look at that. Google's almost back at the all-time highs. Almost back. It's pretty impressive. Oh, and almost back to just flat there on the Nasdaq. Wait for it. Wait for it. Come on. Oh. It's like it's messing with us here. Anyway, DR Horton stuck with Alibaba jumped another percent. It was up about 6.5 this morning in pre-market. It was pretty stable there. Now it's moving. Now you're at about 7.7. Oh, there you go.
Gained the lead.
That's the Nasdaq for you. Now quickly go away. Costco
lost the lead.
Enphase. Oh, come on. Don't be a little weenie. Stay over 1340. It's like trying to hit, push like a dead dog with a stick or something. Anyway. All right. So let's send it over here.
We just thought we'd bring you guys on to watch us.
He doesn't remember me, but I met him. He doesn't remember me, but I met him, and the guy knows more about the stock market than anybody I've met who is a celebrity.
All right, well, let's introduce our guests here at Post 9. They rang the bell. You may have seen that just a moment ago, of course. And this on news that Netflix will become the home of WWE's Raw next year. Also adding 2 new directors to its board. One of them sitting here joining us now in a CNBC exclusive is Ari Emanuel. He's the CEO of TKO and, of course, of Endeavor as well. And Dwayne Johnson, actor, producer, entrepreneur, and newly appointed director at TKO. Gentlemen, thank you both for being here. It's great to see you and see you in person.
Good to see you.
Dwayne as well. All right, let me start with the news this morning that, from the stock market perspective, has captured people's imagination, which is the Raw deal. Right. With Netflix. Just give us some of the numbers behind this. The filing said over $5 billion over 10 years. Correct. A lot of debate amongst investors, how much that's a multiple to your current deal. What can you tell them right now in terms of, from monetary perspective, how significant this is and how much of an improvement it is over the previous deal?
Well, all I say is that we are in line with the market's expectations of where our step up would be. And the only other thing I would say is it's Netflix. They're the global leader. They're the best company with regard to sports entertainment, whether they've done it with Formula One, whether they've done it with Tour de France.
Okay, whatever. It's a sales pitch. It's freaking boring. Where's my button?
Just close the fucking door. Close the door.
Oh, man. Or maybe I should have used this one.
Go yourself.
Okay, no.
Is that clear?
Too aggressive. Okay, all right. Look, everything's the same. Nothing's changed. Except Intel's down more. What the hell? I like Intel. Nvidia is still down about 80 bips, but who cares? It's up $100. Take your 80 bips. I'll take the $100. And then look at that NEO rally, though. 11% on NEO. We were actually even a little higher than that there for a moment. And from a fundamental basis, I don't like the stock. But it'll be interesting to see how much of a technical rebound we can actually pull off on NEO. Cloudflare's holding above that fib, 80.94, sitting at 84 right now. We wanted to watch as well. Let's see if it holds above that. If you can get a bounce on this, it might be a technical reason to start going over 100 again. People are going to start looking for cheap stocks again. That'll happen. Let's look at Canadian Solar. I hear talk about Canadian. So wow, Canadian Solar's up 19%. Hold on a second here. Why would Canadian Solar be open that much? Let's find out. Oh, by the way. Today is 123. In case you haven't realized that, that's the date. The date is 123. And that is Max's birthday. Max is 6 today, so he's more than a whole hand. and he's very he's going to be very excited. And so today we got some fun things for him. Yeah. Okay, so let's see what's going on with CSIQ. CSIQ. Canadian Solar. Let's get the news. Thanks to the happy birthdays for Max. Individual company news. Canadian Solar. Ah. Okay. That's interesting. One sec. Let me tag this really quick. Boom. Okay. I just posted the course member live, so we'll head there soon. But it looks like Canadian Solar actually got some BlackRock backing here. And BlackRock agrees to invest $500 million in Canadian Solar. That's interesting. Let me show you. BlackRock agreed to invest in $500 million in a new arm of Canadian Solar as it increases its bets on renewable power and energy. BlackRock is buying preferred equity, of course they are, in Canadian Solar's Recurrent Energy unit that is convertible into a 20% stake in the company. Wow. Fresh capital will help Recurrent Energy expand its project development pipeline, as well as transition into being a developer and long-term owner and operator of assets. Wow, interesting. Okay. So that's basically, I believe Recurrent is their like solar farm division, where they actually own and operate their own like fields, basically, with solar panels and then sell power, right? And rather than just manufacturing solar panels, they didn't use them and deploy the panels themselves. That's not a bad idea. And Canadian Solar has been in the dump. This is the stock here. I mean, most solar and EV, well, I mean EV to some extent, but most of the solar and energy companies have really gotten destroyed. I personally see that as an opportunity, especially when everything else is so ridiculously expensive. Like, can I really buy more Microsoft at this point? Or let me rephrase that. Can I really buy any Microsoft at this point? Look at that. It hit 400 yesterday. Holy smokes. Wild. Anyway. Yeah. Very, very interesting. Should have been a solar farmer. Oh, did Spirit pop over $9? Let's see. Save. You know, I didn't know this until I flew into the airport, but apparently the headquarters for Southwest Airlines is the Dallas Love Field Airport, which I've flown into. I was just there about a week ago. And that's interesting because their ticker is LOVE, L-U-V-E. Anyway, now I'm going to push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. There we go. See you.